Hey fellow traders, and welcome back to Market Analysis with Richard from NGT. In today's video, we will be discussing how to properly trend trade or swing trade and early entry. So without further ado, let's begin. If you want to trend trade, there are a few things you need to know before you can successfully. First and foremost, have a bigger account. And the reason I start with this is because longer time frames means more pips. So if you were to set your stop loss here, you would have to set your stop loss about 55 or 60 pips to the high of this candle. Now, if you cannot afford to do that, or your account size is not big enough to do that, you are unable to take this trade and you would be missing out on very nice setups and things of that nature. You don't want to have a bad week mess with your psychology for trading, because that will jeopardize your next trade, so on and so forth. Now, if you are planning on being a swing trader, it is important to know how to hedge your position. If you don't know what hedging is, I will be making a video dedicated to the definition of hedging and how to hedge. But hedging basically saves you money when trends make pullbacks. Now, the benefit of swing trading is if you don't have much time to sit down and watch your charts during trading hours, you will be able to set your trades and let them progress, with the exception of checking them here and there. That was the pros. Now the cons of swing trading. Swing trading is for risk tolerant traders that can set a wider stop loss. Now the second thing to keep in mind is how to identify early entry. How I identify early entry personally is I establish support and resistance and watch to see a major break similar to this one above or below support or resistance. That break and that bar would be considered a false break depending on the severity of the break. This is a key to the right risk to reward ratio. And your risk to reward ratio is the key to profitability in long-term trading. On how to properly identify your risk to reward ratio and get the right risk to reward ratio for your trading system, make sure you go check that out. A link will be inside of the description. Now, third, I wait for a break above or below the false break candlestick. So this would be considered a false break candlestick. See, previous resistance. This is also a false break. If you want to watch an in-depth video on false break candlesticks and understanding them, make sure you also go check out our false break candlestick video. It will be inside the description. Now, a break above the high or below the low of the false break candlestick is the decision bar. I'm not going to get too much into false breaks inside of this video. I'm just going to keep it on a surface level now. If there is a possible 1 to 3, I can take. So once I get my stop loss about 55 pips away, give or take, then I'm going to set in a take profit of about 100 pips. So generally, if the market is going up and I see a strong resistance at the top and one bar pokes through the resistance and it pulls back below the resistance, I just wait for the next bar to open and break the low of that bar for a sell. Now there is something called a herein candlestick. That is well known in the false break candlestick trading world, but that is a topic for another video. If you are interested in taking this lesson to the next level, and many more. Check out our website. We have free chart updates and end result posts. So make sure you go check that out. You can really get an update on what we are trading and when we are trading. I hope you enjoyed this video. I hope this video helped, and I hope to be seeing you in our next video.